Market Watchers Jeff Saut and Gary Kaltbaum here on this battle over who takes credit for the strong economy. President Obama saying today it began with him. And he provided good foundation for President Trump. President Trump said it's all him. Gary, who's right?
Under Barack Obama, $9 trillion of new debt was created. That is not a good foundation, if you ask me. He also used 0% interest rates for 8 years and the printing of $5 trillion. For me, that's a legacy that's not very good, because eventually that debt and those deficits, and continues to this day, will come back to haunt markets and the economy, unfortunately.
Well, unfortunately, his successors are racking up that debt at an even faster pace, right?
Oh, you bet. And this administration raised spending $300 billion a year, so I'm not happy with Ryan, McConnell, or Trump at this point in time, as someone who cares about the fiscal well-being going forward.
You know, Jeff, do you, obviously, there's only so much you could say about how a politician or president can move markets. We know they've moved mightily under this one. We know they came back from record lows under the last one. So is it fair to say that each in his own way can take credit for a bull market that is already officially the longest on record?
I take issue with that, by the way. The 1949 to 1966 secular bull market.
Well, no, you're right.
Were there pullbacks?
But without getting in the weeds on that, and you are a genius, so I apologize, I'm not. But that they can both take credit in one way, shape, or form for the boom that we've had.
Yeah, I think that's fair. I would also attribute it to the Federal Reserve that kept the country from going into a depression.
Absolutely. And by that, you mean, as Gary touched on there, keeping interest rates at zero. Had it not been for that, we might have been in even deeper doo-doo, right?
Yeah, I think you would have had a lot of banks go under.
Yeah. We'll never know the what-ifs, but, Gary, right now we know that you know, Barack Obama is sort of out of his shell here and just saying enough already. He's going to campaign on behalf of Democrats and tell them, look, you've got to own up that this boom, this recovery, it's on you, too. You should take a bow. I'm paraphrasing there. But what do you make of that argument and how it's going to go down in November?
Well, it's kind of weird, because all I keep hearing from the left right now is their mantra for this midterm election is we're going to raise taxes. That's what I keep hearing from them. We're getting a lot of avowed socialists. They don't even hide it anymore. They used to hide these words, saying that we want more government control over everything, while Donald Trump has been basically doing the exact opposite with rules and regulations. So they're going against everything that's kind of sort of working right now. So I am not so sure that's going to work very well. And if I was the Trump administration and everybody that's running on the right, I'd be yelling and screaming that tune about where GDP is and the potential of why, with rules and regulations, as well as we'll give them the tax cuts on the corporate side, which has helped also.
You know, in the middle of this, Jeff, we have what could be an expanding trade war, or the threat of one, certainly now involving the Japanese, and the president upping the ante, as I said, with the Chinese, 267. Some are rounding out to say closer to $270 billion worth on additional Chinese goods. Does that worry you, or is that just noise?
At this point, I think it's noise. I don't think we're going to get into a full-fledged trade tariff war, if you will. Mm-hmm. But you'll have to see what happens over the weekend.
What do you look for this weekend?
Well, I've actually been wrong on a short-term trading basis. We raised some cash in January, put it back in February after an 11% decline, looking for new all-time highs. We got new all-time highs a week ago last Tuesday. I actually wrote that I didn't think we were going straight up since we made new highs. I thought we were going to get a stall, but I didn't expect the S&P to pull back under 2890. So on a very short-term trading basis, I'm just plain wrong.
You know, you really shouldn't do that too much. I mean, you're a giant, and you and Gary have both done that in the past, where you admit if you had a bad call. I'd never try to do that, so try not to do that again. But, Gary, in all seriousness, if your take on these markets, you know, they look for aberrant events or outside events, as some call them black swan developments. I don't know whether any of this trade stuff could be that, or the debt situation in Argentina and confusion in Brazil and Venezuela and on and on. But are these events that you look at to say, well, here's my non-bullish scenario?
Well, Neil, I have never had to look at currency so much as I have in the last few months, as currencies around the globe have been crushed. And I have to tell you, if I wasn't just looking at our markets and just looking everywhere else, I'd think we'd be 20,000 on the Dow right now. That's how bad things are. And you mentioned Argentina. I believe they're 70 cents on the dollar on their bonds. So, yeah, it is something to worry about. And when Donald Trump ratchets it up, the tariffs, that really worries me. And the amazing part about this is we're less than 2 months from an election, and nothing good could come from this. Why wait and see what happens? Why do it now? I just don't get it. I believe that's taunting markets, potentially taunting areas of the economy, and again, nothing good comes from it. And I'm hoping he backs away, but it looks like he's going full steam ahead.
Well, the markets also hope cooler heads prevail. It's happened in the past.
Yeah.
We'll see. Gentlemen, I want to thank you both, as always.